All right, John, you're known as one of the biggest bears on the street. Price target for the S&P 49, excuse me, bull on the street. S&P price, I know, I got that one mixed up. S&P price target of 4,900. Do you still hold on to that price target as we see rates hit multi-year highs?
We certainly do at this point, Frank. We can't help but think that, higher rates right now basically is a normalization of rates. The Fed will probably overshoot in this cycle somewhat, but it will likely also continue to show sensitivity to the effects of its actions, very much part of the Ben Bernanke legacy that's still very much a part of Jerome Powell's style. So we continue to be positive on equities.
So positive, I just want to be clear, you're maintaining that 4,900 price target?
Positive on equities, and looking for the S&P 500 to be able to weather what has been a corrective process that began over the course of the last 3 weeks and now seems to be going back to a positive flow for equities.
All right. So with all that bullishness, John, what is your WEX word of the day?
The WEX word for the day is resilience. Keep looking for resilience in earnings overall. Look for resilience in the consumer, in the jobs market, and continuation of an overall feeling of resilience in the U.S. economy.
All right. So with that idea of resilience moving forward right now, and by the way, we're looking at futures moving higher in the pre-market right now. You don't advise clients, but you do advise the advisors at Oppenheimer. What areas would you suggest that they allocate today in particular?
Favorite areas continue to be technology, consumer discretionary, and industrials. We think they're at the core of what is an effort to move towards an sustainable economic recovery process from the whole pandemic era and from the recent corrective process, which we saw in 2022. Can't help but think here that, interest rates at higher levels where they are now effectively is more traditional in terms of someone who buys a bond actually gets something in return in terms of coupon, and bond issuers have to pay for the privilege of borrowing money. And that makes sense to us over the long term. As you know, I've been in this business for over 40 years, and I can remember early on in my career in 1983, 84, 85, 86, into 87, when interest rates were still remarkably higher and stocks moved higher.
All right, so you're also very bullish when it comes to energy. Give us a sense, what pushes energy higher? We've seen such mixed results so far this year, and also we keep saying at a slower than expected recovery in China, and maybe now it should just be a recovery.
Yeah, I think the reality of the pricing of oil is that we are in a process of transitioning to alternative energy. And as the use of alternative energy increases, I think the thought was, there would be less dependency on fossil fuel, but the dependency on fossil fuel to bridge the timeline will likely cause strength in oil prices going forward.